This other video. So it's Camillus here. So in today's video, we'll be looking at how to place trades in our MT4 or MT5, the different trade orders that we have or trade executions that we have, because we have about 5 trade executions. We have instant executions, we have buy limit, sell limit, we have buy stop, sell stop, and we also have buy stop limit and sell stop limit for MT5, because I'll be explaining all of this in this video. So if you are new to this channel, please subscribe to this channel so that you can support this channel. And if you haven't watched our previous video about how to use MT5 or MT4, how to download and install them, I would advise that you should check the description of this video, or you should go through my channel to be able to get the video and then watch it, because this video are in series form. So if you come in halfway, you won't be able to understand what is going on here. So make sure you start from the video part 1 of this video series to be able to go through it all. So let us get right into the video. So I'm going to be using my MT4 for this. Okay, so if you have, let me just string this. So if you have watched the other video, you already know about all of these functions up here, down here, sorry. So if we come to chart, you will see this is our chart. Let it load. So sorry guys, my network is a little bit creepy this afternoon, but we are just going to manage it like that. Is that okay? So if we come here, let me come here. So just hold on for it to load. It has to load. Okay, so our chart is now fully loaded. So you can see this is the market. It's already going. So I told you that once the market is moving, you'll be seeing the ask and the bid price shifting, and the distance between these two gaps is called a spread, and it's measured in pips. So if you haven't watched the previous video, you should check the description of this video to go watch it. So you can see this long candle here. This was news yesterday. Okay, so for those who trade news or those who will be trading news after this video series, then you understand what will make this candle to go like this, which is called fundamentals. But let us get into the purpose of this video. So here I explain the functions of placing a trade, and I explain this function here. The plus sign you see up here, this plus sign you see up here, that is the trades function. So you tap on it. Now the next thing you are going to be selecting is going to be your lot sizing. I'll make a video about risk management and also explaining lot sizing, and in that video I explained about the different lot sizings that we have. I talked about we have micro, mini, and standard. So micro is 0.01, 0.01, then mini is 0.10, 0.10, so that you shouldn't get confused. Then standard lot size is 1. Okay, 1, let me just say 1.0. all right, we are going to be narrating that up there from 1 point. So in a nutshell, 0.01 is equals to 10 cents. Okay, so 0.02 is equals to 20 cents. 0.03 is equals to 30 cents. Right up to 0.09 is equals to 90 cents, which means if you are putting this here, it means, as I spoke to you, that the market moves in pips. It means that if the market goes up 1 pip, it means for every 1 pip that the market moves with this lot size that you have used, you will be having 10 cents. So if the market goes up 10 pips, it means with the lot sizing of 0.01, you will have $1, since 100 cents makes equals to $1. The internet have ceased again, but let me just explain this really quick. Okay, it is back. So with that, you'll be able to know how much you are entering the market with to gain or to lose. Is that okay? So if you enter a trade with a lot size of 0.02, it means every pip you have 20 cents. So if the market goes up 10 pips, it means you've made 20 pips. So 20 pips times 20 cents is going to be giving about 200 cents. So that should be $2, sorry, since 100 cents equals $1. So you can do the math with this. So if you have 90 cents, which is 0.09 lot size, it means 90 cents per each pip. So 10 pips will be how many? So from there you'll be able to calculate it. So that is just how it is, guys. So 10 pips should be giving you about $9. So that is just it. Now let us go now to mini. So this was the micro, okay, the micro lot size. So we are talking about lot size. This is the first thing here that we'll be looking at. We're talking about lot size. So let me clear this. Now we're going out to mini lot size. So mini lot size, mini lot size. So guys, I haven't scripted this, so I'm just taking it natural. Okay, let us do it as if we're having a real physical class. So on mini lot size, I spoke about mini starting from after 0.09. What do we have? We now have 0.1 or 0.10. 0.10 and 0.1 are the same thing. Is that okay? So that is how it is. So let me clear this. Let me remove this so that we can continue it now normally. Why is this thing taking so much time? Okay, so let's proceed, guys. Let's proceed. So now with this, you now have 0.1 is equals to $1. Okay, so after 0.09, which is 90 cents, if you add another one again, it will give you by 0.01, which is now equals to $1. So we go again 0.2, which is same as 0.20. Don't be mistaken. Okay, it's equals to $2. 0.3 is equals to $3. Right up to 0.9 is equals to $9. So if you are using any lot size, you should be able to differentiate. So go in your book where you are writing your forex notes there, and make sure to bring out these standards from the standards mini and micro, or from micro, mini and standard lot sizing, which means that if the market went up or went down, let me say 10 pips again, let me remove my face from here, went up again 10 pips, it means with a lot size of 0.1 we are going to be having $10. Okay, now if the market went up 10 pips and our lot size was 0.2 or 0.20, then it means our 10 pips move will be giving us instead $20. So the bigger the lot size, the bigger the money you are to make, and the bigger the money you are to lose as well. So try to understand that. Now if we use 0.9, it means 10 pips will be giving us how many dollars? $90. So that's just how it is. So with this, you can see that our lot sizing here is at 0.50. It means this lot sizing is at mini. It's at mini. 0.50 is the same as 0.5. Okay, now this 51 here now stands for 0.5 plus 0. Who can say it? 0.01, which is now 10 cents, which is equal to 10 cents. So every move here, every pip here will be equals to $5.10. So that's just how it is. So each time you see 55, it means $5.05 at this lot sizing. Now let us go to the standard. So standard is always very easy to understand. Standard stands for 1. After 0.9, if you add 0.1 there, it will give you 1, right? So one lot size is equals to $10. If 0.9 was equals to $9, it means if you add 0.1 again there, it means it will be equals to 10, right? So go to 2 is equals to 20. So instead of us saying that the market went let me say 10 pips up or 10 pips down, since the market moves in two directions, either up or down, then we will say that this 10 pips is going to be giving us 10 times 10 is going to be giving us $100. So depending on your account size, if you have much money and you want to risk it more, then know that if you're entering the market with a standard lot size, which is 1, it means that for every 100, sorry, let me take it slowly. It means that for every 1 pips, you are either gaining or losing $10. For every 1 pip, you are gaining or losing $10. So if you enter the market like this with this loss and the market goes negative 10 pips and your account balance was $100, it means the market goes down opposite direction of your prediction. It means you have blown your account. This is now where risk management now comes in. Okay, so that is that. I think that is that. So from here, let me clear it. So from here, you now know that 5 lot size means $50 per pip. 10 lot size means $100 per pip. 11 lot size means $110 per pip. 15 lot size means how many, guys? $150 per pip. So if you go 10 pips with this kind of lot size, you will make more money. So I believe from here you have now understood lot sizing and how to be able to place trades with a good lot size. So this now takes us to risk management. Let me just explain about risk management. Like I was saying, if your account is let's say $20. Sorry about the call, guys. Sorry about the call. So let's just say if your account is $20, where was I? Sorry for the distraction. If your account is $20, it means your range of the range of lot size of you entering trades shouldn't go above certain lot size limit. For instance, if you enter a lot size of, let's say, 0.5, it means every move you are risking 50 cents. If it goes negative, you are risking that. It means how many pips will the market move to be able to clear off this $20 balance that you had here. I believe from here you'll be able to calculate it since you've really understood lot sizing and you understood what is called pips. Since the market moves in pips, I will make a more explanatory video again, explaining this again in more details. But I think this is already very okay for you to understand. It means if the market moves 2 pips, it means I lost $1. Okay. If you are losing a loss of 0.05, it means if the market moves 2 pips, I lose $1. Since 0.05 is equals to 50 cents and 100 cents is $1, it means that if the market moves 2 pips, I lose $1 or I gain $1. If the market moves 4 pips, I lose $2. From this calculation, you will be able to know how many pips the market will move, either up or down, depending on whether you are selling the market or you are buying the market, for you to be able to lose all of this money. Now from these calculations, you will be able to know the correct lot sizing that you should enter that market with. If you want to risk $5 in this market and you want the market to go, let me say your analysis is showing that the market has to go 30 pips and you want to risk $5, you will now come here and say that, okay, if I use a lot size of, let's say 0.02, it means 20 cents per each pip. It means 30 pips will give me how many? Now, since we all know that 10 pips is $1 for 0.01, it means for 0.02, 10 pips will be giving us how many? Will be giving us $2. 20 pips will be giving us $4 and 30 pips will be giving us $6. In this trade of 1:3 reward ratio, you will now say, okay, I will be risking $2 of this account to be able to get $6. How do you risk it? You now come now to your lot sizing. You can now put 0.02, saying that for me to lose $2, the market needs to go negative 10 pips if I was buying. I mean, instead of it going up, it should come down and remove me from this place. And now these 2 pips, this 10 pips, this standard is equal to $2, according to your lot sizing, will be what we call stop loss. Okay, would be what we call stop loss. Then this 30 pips target that you want to target like that is now what we call TP, take profit. Now if we go to the chart, let me use the chart now to demonstrate. It means that if the distance from here, let's just say this is where the market was at, you read this reading here, which is 1 point something, the market was here, and you predict that the market will buy and go up like it did for this news yesterday, and you also put it that, okay, from here, like this is where my stop loss is. If you buy the market and the market happens to go down negatively instead down, once it gets to this point, it should remove me out. So this distance from here like this to here is 10 pips. This is just for demonstration, guys, for you to understand stop loss and all the like. So from here, you know that from here to here, let me just say the market you were hoping that it will reach here. This is where you call TP, which is take profit. You read the figure here, you enter the market at this point. Now your stop loss is down here, so you are risking 1:3. It means the portion you are risking down above is having it 3 or 4 times or more. Okay, this is what they call risk to reward ratio. It means you are risking this 10 to be able to get 30 or to be able to get 40. So this is now $2 down here, depending on your loss size. Now you're like, okay, I have 10 pips here, so I'll be risking $2 depending on my loss sizing. And as the market pushes up, I will be able to make this amount of money. So this is how you come out with your stop loss, you come out with your take profit. Now you can now put take profit 1, take profit 2, take profit 3. So take profit 1 means that you will enter 3 different positions with the same stop loss, but now different TPs. Now the purpose of you entering 3 different positions with the same stop loss is that it means if you enter 1 position, you are risking $2 for that trade. If you enter 2 positions, it means you are risking $2 times 2, because there are 2 positions of the same trade. If you enter 3 positions, it means you are risking 3 times the $2 that you were risking. So you'll be risking at 30 pips in total. That is why you will now come under trade. You will see somebody having a lot of positions running. If the positions are under 1 trade or 1 currency pair and enter at the same time, it means that person is risking a certain amount of money in his account. So if you enter 3 positions, it means instead of you thinking that you're risking $2, you'll be risking now but $2 times 3 positions. If their stop loss are the same as this and their entries are the same, then you can now come here and you now change. Maybe this first TP1 will be 1:1, TP2 can be 1:2, then TP3 can now be 1:3. I hope you get the point. The purpose for you entering to your TP1 and TP2 is to minimize your losses. For instance, if you enter 1:1, it means that when TP1, if the trade comes up here and hit TP1 and later on comes down back and hit your stop loss, it simply means that instead of you losing the $6, it means this 1:1 means you have gained $2. You have reached $2 to gain $2. It means the $2 that you gain here will be able to compensate for one of the losses. So you'll be able to lose just $4 instead of you losing $6. I hope you are understanding it. But if you are not, comment in the comment section of this video. And if you're enjoying this video, please subscribe to this channel so that I'll be motivated to make more videos like this to be able to teach you and to give you basic knowledge about how to trade the financial market. Now, the next thing I would like to talk about before I go to the different types of trade is break even. Now, when they talk about break even, I spoke about you entering the market here. This is a stop loss here, and this is TP1, TP2, and TP3. Let me just name them: TP1, TP2, and TP3. So let's just suppose that you've entered this trade and all of them are going up like that, and you have to go somewhere and do, maybe you are doing a house chore, so you want to get busy about something, and you are afraid that this trade can come back here and come and hit your stop loss, which is down here. Okay, now instead of you doing that, you take this stop loss like this. Instead of you, let me just say the trade is going up and it is somewhere here around TP1 like that. Instead of you being afraid that the trade can reverse and come back and remove you from stop loss, you remove this stop loss and then you come and you put it now somewhere here. You read this number here like this, and then you go now into your trade, you edit it, and that is how you'll be able to edit your stop loss. Is that okay, guys? That is how you'll be able to edit. That's called break even. Okay, that's called break even. Means you have break even the market and you are not risking anything. So even if the market has to reverse and come down, you will come and hit your stop loss but above your entry. So break even is just taking your taking your stop loss above your entry. So you remove this here and you bring it here. Removing it here means that you come here and you read this new number here, this new figure here, and you edit your trade. So let us go now to the trade section itself. So when you come out to trade section, why is it even? Okay, so if you go to trade section, you just click on place trade. Now here I've already explained to you stop loss, so you already know stop loss. Now talking about TP and stop loss, this is TP. This is the figures here, and this is TP here. TP is always in blue or green depending on any color, but you can see it is red, means your account is red, you are losing money. So this is LS. So this is where you can enter your trade with a stop loss at once. So what you usually do is, oh sorry about that, what you usually do is that, come back here, what is the problem? I don't know why it's refusing to go back. Anyway, let's continue. Let us suppose I want to enter a trade now like this. You will see here market execution. Market execution stands for instant execution. It means you are entering that trade that very moment at that same time. In fact, and now you now have two functions down here. You have the sell and the buy, which is down here. So if you are buying the market, you can click on buy. If you are selling the market, click on sell. Now if you already have the trade stop loss and TP, this is trade stop loss and TP, you copy the exact figure of the stop loss and TP depending on the currency you are trading or the figure you are trading or anything you are trading. Either it's from a signal group or wheresoever, you feed it here and then you feed it here. Even if you forget to feed it here, you can still come back later on and edit it. But what you cannot edit is the lot sizing. So let us go now and select a good lot sizing. So this is 0.01, which is the micro lot size. So if I click on buy, if the network is good, you can see it has opened. So you can see as it's moving now from here, click on done. Guys, my internet is disturbing. I don't know why it's trying to freeze like this, but that is it. So I'll just remove it and then come back. Let me go back to my MT4. Let us load back to it. New. So this is the position that we just opened. So you can see we bought the market and this is it. So I'll just use this position to explain to you guys. Is that okay? So it is back online. So you can see from here, you know that if you have 10 cents, it means the market has moved 10 pips in the downward direction. If it is red here, it is red here. So when it is red, you see this bar up here will be red. When you are in profit in blue, you see this bar here in blue. So if you want to edit it now, you swipe your hand from left like this. From this trade interval, you just swipe from on top of it, you bring it. When you swipe and you bring it, you will see this interface. At MT5 you will see more. Okay, so this first one here, let me do it back. This first one means take me to the chart of this pair. This second one means edit this position, and now this third one means close the position. So we are going to look at them. Let us enter at edit. Now at edit you will see the modify. This is where you can now come back and now put in your stop loss, take profit and then stop loss this way. So if they give a signal or you want to enter a trade and you don't want it to move, the market should move past your entry point fast, you can enter your positions, then you later on come back now and you edit now and you put your stop loss and your take profit to be on the safe side. Guys, always trade with the stop loss to be able to secure your account. So that is that. And that's if I click now on the tick, you will see now close trades with loss down here. Okay, so that is how that is. So if I click on close trades, you will be able to see that the trade is going to place, so it's incur. Due to network is going to take time to close and the deducts amount from my account. The next thing is let us click here and click now on market execution. You have to click now here to see the other options of you entering the market. So if you click here, you will now see these are them. You can see the market execution is instant: buy limit, sell limit, buy stop, sell stop. Now buy limit, we will take each of them one after the other. Buy limits, let me come back, go to chart. Buy limit simply means the market is selling. Let us suppose the market is selling and is coming down like this, and you expect or you suggest that the market will reach at this point as it is moving downward, and it will reach at this point and it will start going back upward. So you now come here and you put a buy limit. Now when you put a buy limit, you will always put your stop loss and your take profit. Stop loss means, should in case the market sells, reaches here and activate this order and then comes down like this straight, after let me say 10 pips or 20 pips, depending on your stop loss that you have calculated, the market should remove me from my stop loss from here. So you calculate this figure, you put. So buy limit is not like a market execution. So if I come back here, let us come back here and look a figure. Let's just say, okay, the market is now selling. Let's just suppose that the market sells like this and get to this figure, which is 1.058550. So we come now here, we go to market execution, click on buy limit. So they will put now the price, which is 1.0585. What was it again? Was it 50, guys? I've forgotten. But let me just see. 50. No, it cannot go. Wait. Sorry. 1 point. I had to click on the point. 0.8550. Okay, let me place and see. You now click on placed. Okay. It's insecure. The network is really poor for me here this afternoon. So yes, I was correct. 1.058550. So if the network comes back and it's okay, it will appear here. This is it. So it's going to appear here, and from there I can now set the stop loss to be somewhere here. So this will be my entry. Now I can put now my TP that it will come back and reach again up here. So this is it, and the reverse is same for sell limit. So come again, you will see sell limit. Sell limit means the market is buying, it's buying and it's going up, it's buying and it's going up, and you predict that when the market gets to this point, let's just say to this point, the market will start selling down. So you now put your sell limit. So each time you receive any trade positions or signals, you always see either sell limit, buy limit, sell stop, buy stop, and so on. So let's just suppose that this should be your entry, that it should reach and activate you. So it will reach and activate you. Then your stop loss will now be above. Since you are saying so, your stop loss will now be above. You read the figure and you go and you put it. Is that okay? So if we were to enter the market at a sell limit, it means we will put it at 1.06650. So you come back here, you click on sell limit, you now put price should be 1.06650. And then the next thing now is, if you have a stop loss to put already, you put your TP, which is take profit, and put your stop loss at once, and then you select your choosing lot size based on your account. You click on place trades. This network is delaying. Okay, so that is that for buy limit. Now the next one is network has to come up for us to be able to see the next part. Now for buy stop and sell stop. Buy stop means the market is buying. The market is buying, and you are predicting that the market will reach here and keep buying. So the market was on an uptrend, but you are predicting that when it will reach here, if it breaks this zone like this, I'll put my buy stop here. It will continue to buy now and push upward like this one did, like that. You will now put your stop loss below and you put your take profit above, in the case that if the trade comes up and activates your trade, and instead of moving up, it instead comes back downward after activating your trade, once you get to this point of negative pips of this quantity, you should move it out of the market. And at the same way, sell stop means the market is selling, and you predict that once it breaks this zone, it will fall down massively. You now put your sell stop below that zone here. Once it breaks and activates it, it will go down. Now your stop loss is now going to be above your entry, since you are selling. So it means that if it reaches here, it comes down here and then activate this trade. Instead of falling down massively, instead turns and it's going up. Once it gets to this limit of, let me say, 10 pips or 20 pips, or how many pips of your stop loss, it should remove me out from the market. Guys, if you have enjoyed this video, I want you to give this video a thumbs up, and I also want you to be able to leave your comment of what you want me to make a video on concerning forex in the comment section of this video. And at the same time, you should also check my description of this video to be able to get yourself registered into one of the forex brokers that I will list in the comment section or in the description section of this video, which is either just forex or xnest. Those are the best two brokers that I can recommend to you. Like you can see, this is a demo account that I've just shown you here. If you watch my previous video, you'll be able to see the live account that I had there and so on. So everything that you see here is the same as that of MT5, except for buy stop limit and sell stop limit. You won't be needing that as a trader, okay? You'll be needing that as a beginner trader. Maybe as time will go on, you'll be able to learn a lot of things. And also, if you haven't subscribed, please subscribe to this channel to be able to support this channel. And at the same time, share this video to your friends, because with this basic knowledge, you'll be able to place trades even if you don't have any knowledge about forex. You just need to come to this video, watch it over and over to be able to get a full understanding about the video, and at the same time to be able to place trades. Even if you cannot analyze the market, people can analyze the market, give you enough signals, and then from there you'll be able to place trade following the small risk management that I explained here in terms of lot sizing and so on. So that is that, guys. That is that for this video. See you guys in our next video, and sorry about the network issue and the interruption in the video. Let me just try to close in profit. The network is disturbing, that is why it's doing that. So that is that, guys. See you guys in our next video series. Love you all. Peace.